In Canada, the federal and provincial governments provide a variety of programs that offer benefits to those participants who are unable to work due to injury or illness. In this session, we will review the benefits available from these various government-sponsored plans. Now, as you may be aware, accident and sickness insurance is available from basically three key sources. You can purchase an individual plan. You can get coverage through your group plans. Or the third area or source of this type of coverage from programs that are offered by both the federal and provincial governments. So in this session, we are going to focus on those plans available from the provincial and federal governments. Individual plans, again, you can buy a personally owned policy. Under group plans, as you are aware, you can get group coverage from an employer, an association, alumni, or a union. And there are also some coverages available from if you hold a credit card. So credit card companies also offer this type of coverage. On any other sort of bank or lending institution where you may have taken out a loan or a mortgage, you'll find that some of these organizations will also offer accident and sickness coverage in the event that someone becomes disabled as a result of an accident or an injury or sickness, and they can't make either the payments on their credit cards or just to have ongoing income to support their ongoing expenses. But in this session, as I said, let's focus on the plans available from the various governments. So the first one I want to cover is employment insurance. And the employment insurance program in Canada is a federal government program where both employers and employees contribute. And the primary benefit for the employment insurance program, obviously, is if you have lost your job out of no fault of your own, then you would be eligible for some employment insurance payments for a given period of time, and they have certain limits in terms of how much is available on a weekly basis. Now, in addition to that basic benefit, which I just explained, if you are injured on the job or you cannot work due to illness or an injury, or you've been quarantined, and you're probably familiar with this term, given the pandemic situation in the world this past year. So there is a benefit available under the employment insurance program for payments if you're unable to work due to illness, injury, or quarantine. And to qualify for a benefit under the EI program, you must have worked at least 600 hours in the previous 52 weeks. And you must have suffered at least a 40% reduction in your income because of your illness or injury or quarantine. So there are conditions. You must have been working for 600 in the past 52 weeks, suffered a 40% reduction in your income, and if you qualify under these criteria, then benefits will start. Usually there is a 1-week waiting period. And the maximum benefit under the EI program is going to be for 15 weeks. So it's a 15-week benefit program with a 1-week waiting period at the beginning of the claim. Now, how much is one expected to receive? Well, there is a cap. In other words, they'll cover up to 55% of your income, up to a weekly maximum of $595 per week. So $595 is the maximum you can receive. However, 55% of your income is less than that number, then that's the number you will receive. And these are the benefits for the year 2021. These benefits are taxable. Again, basic reason is because these contributions you and your employer would have made to the EI program, they are tax deductible. So once again, if the contribution is tax deductible, usually the benefit is taxable. Now, under the EI program, if you are receiving any other type of coverage as a result of your illness, injury, or quarantine, then they are going to be the second payer. In other words, they're going to offset any other payments that you have been receiving from other insurers and take that into account in the benefit, that $595 maximum benefit that they are going to be paying you. So there is really a dollar for dollar offset. And again, the reason for this is the organizations don't want someone to be receiving more income when they're off of work than if they were actually working. So they are the second payer. Now, they're the second payer for other forms of coverage, except if the individual has privately owned insurance, then that is separate. But in some situations, the privately owned insurance might offset other benefits coming from other providers. So we all have the programs that tend to offset each other to keep that basic premise of you not being paid more to be not working than to actually be working. So this is a quick summary of the employment insurance disability benefit that is available. Let's now look at the second plan, Canada Pension Plan, which is the CPP, and you, I'm sure, are familiar with this program. We've studied it, or you should have studied it, in other sections of this course. But CPP is primarily a pension plan, but you may recall that under the Canada Pension Plan, in addition to a retirement pension and a small death benefit, they also have a survivor benefit. But the fourth benefit under the Canada Pension Plan program is a disability income benefit. Now, the Canada Pension Plan, CPP, is a contributory plan, and so it's operated by the federal government for all provinces other than Quebec. Quebec has got its own Quebec pension plan. It's similar in design, but pricing is a little different in the province of Quebec, and they've chosen to run their own program for their residents. The contributions to the Canada Pension Plan are shared between the employer and the employee. For 2021, I believe the contribution is 5.15% of your earnings up to a certain maximum. So the key point here is that both employers and employees contribute to this Canada Pension Plan, and disability benefits are available to members who become disabled and are under the age of 65. Now, it is a pretty tough disability definition under the Canada Pension Plan. You must be deemed, as a result of your disability, to have a disability that is severe and prolonged. So what do we mean by severe? Well, severe simply means you're unable to work in any capacity. So you can't do any job appropriately or properly. Prolonged means that there's an expectation that your disability is going to be long-term, likely or usually permanent, and in some cases likely to result in your death, likely an earlier shortened life expectancy as a result of this disability. So you can see that it's a fairly harsh definition under the Canada Pension Plan to be able to collect the disability income benefit. You must provide evidence of that disability, and you have to have a doctor's report authorizing or demonstrating to the Canada Pension Plan administrators that you do in fact meet this definition. And based on this medical information, they're going to determine whether you qualify. And if you do qualify, benefits are payable until you recover, or age 65, or if you die before obviously age 65. So there's a 3-month waiting period. Benefits, with key point here, like most disability benefits, they'll stop at age 65. And the benefits under the Canada Pension Plan, under this disability benefit, are taxable to the recipient. Again, same reason, because the contributions to the Canada Pension Plan were tax deductible. So this is a brief overview of the disability income benefit available from the Canada Pension Plan. The third program I want to cover is workers' compensation. Now, first of all, you will notice that the first two we discussed, employment insurance and the Canada Pension Plan, these are federally sponsored programs. So they're sponsored by the federal government. Workers' compensation is different. Workers' compensation, this program is operated by the provincial government. So each province has its own workers' compensation program with its own benefit design. Fundamentally, they're quite similar, but again, each province, they'll have slight differences, but in general, this summary is going to cover what is available under the workers' compensation program. So the disability benefits to qualifying employees, you must suffer loss of employment due to injury incurred on the job or a workplace-related injury. So it might be that an example in the book was asbestos or chemical poisoning. In other words, your injury primarily on these workers' compensation programs, your disability must result from something happening to you while you were at work. You're not going to be able to collect workers' compensation disability benefits if you broke your leg while you were skiing on the weekend somewhere. You have to have had the injury occur on the job or at the workplace. Now, what's interesting on these programs, the employee does not pay anything into the program. The premiums are 100% paid by the employer. The government sets up sort of for the accountants, if you understand this, a payroll tax. So it comes out of the company's payroll. They are assessed the workers' compensation premiums, and the premium to the workers' compensation program actually varies by the nature of the business. So, if you have a business that's in construction or much more, where your employees are much more prone to injury or possible injury, then the premiums are going to be more for you as the employer than if you're in a job, potentially a clerical job where people are more sedentary and the risk of injury tends to be a little less. So that the premiums that the employer are going to pay is also related to the nature of that business. Now, the benefits you get under the workers' compensation program, the period or the length of the benefit varies by province, but also within each province, you're assigned to a case manager who will review your situation, and it's up to that case manager to determine how long you are going to be eligible for benefits. They will keep track of you, they will keep track of your improvements, and to make sure that you're following any rehabilitation programs that have been recommended. And so your period, how long you're going to get paid, varies by province and by your case manager's decision. Now, you can get up to 80 to 90% of your take-home pay under this program. There is no benefit for the spouse or children, so it's primarily for the employee or the worker. And what is interesting here is that your payment is not taxable. So in these government programs, as you are studying for your qualification exams, make sure you understand what the programs are, which government sponsors them, which of the benefits are taxable, which are not taxable, who pays the premiums, these kinds of things. So questions usually want to ensure that you not only know that these programs are available, but you also understand the differences in these types of programs. So make sure you study those differences. The last thing I want to refer you to in this session are a couple of tables in your textbook, table 6.1 and 6.2, and they have to do with the taxation element of the contributions to the plans, and also the taxation element referring to the benefits that you receive. So table 6.1, how are the premiums or the contributions you and or your employer make to the program? How are they treated from a tax standpoint? And if you are eligible to receive benefits, how are those benefits taxable? So take a look at table 6.1 and 6.2 in your textbook to make sure you understand those situations from a taxation standpoint. Okay, so I think that's what I want to cover on these 3 disability income programs available from the federal and provincial governments.